Advice. This video is made for entertainment purposes only. Please invest your own money at your own risk. I am not a financial advisor. Please do your own due diligence or research as I will do mine. This video is not financial advice. What is up, everyone? This is Safe Investor AG, HRSIM Saucy Warrior. And today on the next Pancake Swap Part 2, I bring to you Saucerswap V2. Yes, we're gonna watch this quick video. And let's go. Okay, I am so stoked for this. I'm really excited for this because guys, they're pulling ahead of everyone else. They really are. They're so, I mean, in their tokenomics, and they're already coming out with the V2. You know, not even PancakeSwap had a V2 up until after their first bull run. And if you look at Saucerswap, they haven't had their first bull run yet. Now, they've been out since August of last year. So they're just about a year old. So everything is looking amazingly great. So, all right. So let's look into their V2 docs, right? So I'm going to post this this tweet so you guys can check it out, because the V2 features, and it's not a new token. Please understand, they're not launching a new token. You're safe holding the same token. Sauce and X sauce, everything is good. Don't worry about it. So it'll feature concentrated liquidity, MetaMask support. Yep, your MetaMask. Lari, which is the Liquidity Aligned Reward Initiative, Tokenomics V2, and a new web app, and more. So before we continue, just let's do a quick update. The market cap is 11 million, which is amazingly cheap. Stake sauce 45%, circulating sauce 545 million, which is 54.5%. Amazing. Total value locked 32 million. Beautiful. Okay, everything is looking great. Look at that liquidity chart. It's climbing as it should. And it's going according. It's about to break this, and it's going to enter the 50 million. But anyways, let's get right to it. So you come to their post down here, and I'm gonna post this right now. Amazing news. Shooting a video right now as we speak. There we go. Reply. Okay, so click on this and it'll open up the papers. Saucerswap V2 tokenomics. So, update. This proposal has since passed and will be enacted when V2 launches. The updated tokenomics can be viewed here. So the updated tokenomics, let's open that up so we can have a look at that. So this is a part one of the videos, because we're going to go to the next part. We're going to try to deep dive into this so we can all understand. I'm not a rocket scientist, guys. Please understand this. So anyways, additionally, an in-depth explanation of the Liquidity Aligned Reward Initiative. The incentive model for V2 can be viewed here. So, okay. Now, this article will introduce the upcoming Saucerswap V2 protocol and discuss the motivation for and proposed structure of an updated sauce economics model. So here we have it. Concentrated liquidity, reduce inflation, relocation, and more. Guys, reduce inflation. Reduce inflation. Reduce inflation. What does that mean? The token is becoming deflationary. Which means what? Y'all remember what happened to cake? Exactly. This is what it means. Rocket ship. It's going to be beautiful. Just Beautiful. Oh man. Okay. So anyways, the background. Saucerswap is launching a concentrated liquidity market maker, CLMM, protocol based on Uniswap V3. You'll hear that? On Uniswap V3. That's why it'll be ready for MetaMask. Can you imagine? Anyways. Alright, referred to as Saucerswap V2, gives individual liquidity providers granular control over what price ranges their capital is allocated to. Individual positions are aggregated together into a single pool, forming one combined curve for users to trade against. That's perfect. In turn, this can generate more trading fees for LPs within the active price range. Furthermore, Saucerswap V2 introduces a multi-tiered fee structure. This allows liquidity pools to be appropriately compensated for taking on varying degrees of risk. Saucerswap will therefore inherit the flexibility and capital efficiency of Uniswap. Perfect. The leading DEX by market share. And we've discussed this in one of my open spaces. While also leveraging the innate benefits of the Hedera network and an intuitive UI and UX. Now, key advantages include LPs have the capacity to provide liquidity with up to 4,000x capital efficiency in comparison to Saucerswap V1, thus receiving elevated returns on their capital. Capital efficiencies allows for the trades to be executed with greatly reduced price impact in comparison to both centralized exchanges and stablecoins focused AMMS, so automated market makers. So you can see here that they're mainly focusing on stablecoins. This V2 is for stablecoins. So this big old pool they're going to be having, as mentioned, where was it? Right here. This can generate more trading fees for liquidity pools within an active price range. Furthermore, Saucerswap V2 introduces a multi-tiered. So the one pool, individuals' positions are aggregated together into a single pool, forming a combined curve for users to trade against. So stability. Anyways, liquidity pools have the opportunity to increase their exposure to desired assets and mitigate their downside risk. Liquidity pools have the ability to trade one asset for another by depositing liquidity into a price range entirely above or below the current market price, emulating a fee earning limit order that executes along a smooth curve. No way. What? Additional benefits. Transactions are fairly ordered. No MEV front running. Of course, it's Hedera. There aren't any front running. And confirmed with finality in seconds. Due to Hedera's absence of blocks, high throughout, and low predictable fees, Saucerswap V2 is not subject to the cost-prohibitive nature of protocols on the most other layers, layer 1s. Therefore, it will prove greater accessibility and market competitiveness during periods of high DEX usage across the industry. Example, volatility, bull markets. Since the CLMM is expected to generate high real yields, SAS token emissions will no longer serve as a primary liquidity incentive. Do you guys get how it's about to become deflationary? Now remember, just for those of you who remember, a concentrated liquidity market maker. So that's what it will become. It'll become a concentrated liquidity market maker. Dang, this is a lot to soak in, not gonna lie. So since the CLMM is expected to generate higher real yields, SAS token emissions will no longer serve as a primary liquidity incentive. So they can slow down. the token printing. Does that make sense? Pushing and making the project deflationary. So beautiful. So let us explore the hypothetical scenario to understand the potential for diminished reliance upon liquidity incentives as a result of increased Saucerswap V2 fees. Assume 11.8 million in total value locked. Some liquidity will remain in V1 pools, and a volume liquidity ratios of 29%, median of Uniswap V3 comparables. When setting the protocol fees to 1/6, the 3.5 million daily projected volumes translate to 1.8 in supply side fees, example fees to LPs, and $370,000 in protocol revenue per annum. For comparison, Saucerswap V1 has 19 million in total value locked and generates 483,000 in supply side fees and 97,000 in protocol revenue per annum. It follows that under this hypothetical, Saucerswap V2 returns a 15.64% average real yield APR versus a 2.47% average APR currently offered by Saucerswap V1. Even when accounting for the 12.04% average farm APR of the current protocol, Saucerswap V2 has the potential to offer a greater overall incentive to liquidity pools. Moreover, liquidity pools in V2 pools will be primarily compensated in tokens underlying the respective pool. So you're no longer going to be paid in sauce or HBAR, but you'll be compensated in whatever that pool is made of. So more HBAR, more USDC for an HBAR USDC pool. Does that make sense? These tokens can be claimed directly. That's just beautiful. Now, proposed tokenomics. One last paragraph and then we're going to drop this. Sauce emissions. Saucerswap proposes a 60% cut to the inflation rate of newly minted sauce, coinciding with the launch of Saucerswap V2. This cut would be effectuated incrementally over a period of 6 weeks to facilitate a seamless migration of liquidity to the V2 pools. It is important to note that the Saucerswap V1 will continue to be maintained. V1 pools serve an integral role in long-tailed asset markets and price discovery. As such, the farm contract will not be deprecated. Rather, the liquidity incentives for V1 will be reduced, with a portion of those emissions redirected to the DAO treasury. I don't mind. That's cool. After accounting for the decreased rate of inflation, the proposed relocation of emissions is as follows: 47% to V1 pools, 9% to Dev Cut, and 43% to the DAO. Cool. All right. Well, gonna end it right there. I'm gonna leave this link right below this video so you guys can read through it. I strongly recommend for you guys to read through this because not only will this spike hard if HBAR goes up, but it's also going to spike hard because it'll become deflationary. And then it'll spike super hard because of the buying volume. Guys, this is a no-brainer. Okay. This is really a no-brainer. This is the next pancake swap, and it'll explode, in my opinion, on the bigger ratio than pancake swap did. It'll make more than 100x. I'm estimating probably 150x, and it's gonna be a beautiful spike when it happens. And the tokenomics are great. Look, it's already launching the V2. PancakeSwap, they just launched their V2. They launched V2 after the last bull run. So Saucerswap is way ahead of the game and is prepping themselves for what's coming because they know they're about to explode. PancakeSwap has a silly burning mechanism. I consider it silly because Why would you have a burning mechanism when, look, the total supply is, no, it's 800 million tokens. Circulating supply is at 228. So it's about 30% of the supply that's circulating. Why would you have a burning mechanism when you have a tiny, this 30% of circulating supply is tiny? That's nothing. Why would you waste? Why? Whereas, look, Saucerswap has 1 billion. They have 1 billion, okay? And that's never going to change. Has 1 billion sauce. Circulating supply is at 54%. See, Saucerswap doesn't even list it. They don't even list their circulating supply because they know that it's not that great. It's not that great. And they're like 4 years old. Saucerswap is already 1 year old and they're at 54%. So they're going to slow down their circulating supply. And instead, they're going to push this token to become deflationary. So when they have the first bull run and it skyrockets because their number one paired token is always H bar. You see that H bar X? They're going to be paired up with H bar X and H bar, and that's going to push them to the roof. And since they're going to be slowing down their circulating minting, they're going to be, boom, it's going to skyrocket. And then the buying volume is just, it's a no-brainer. I don't see how people just cannot see this. If you're watching this video, comment down below that you're loading up on sauce. That's it. That's all I got for you. On my next video, I will continue reading where I left off and explaining. But they're targeting more. The V2 is going to be targeting more for stable coins, which is great because they even use it in an example right here. And they're going to be compensating at a higher percentage for people that have liquidity along with stable coins, and they will give you and pay you in those stable coins and whatever the liquidity pool is formed with those tokens. That's how you get paid. It's amazing. So I'm going to go over the tokenomics on this next video. So please just comment, like and subscribe. Let me know what you guys think about this video. Does it make sense? Does it not make sense? Please come over and read this, because you need to understand what you're putting your money into. And that's it. That's it. Sauce is going to go to $1, $2. So it's going to go to $1 or $2 or more. I'm telling you right now, it's way ahead of PancakeSwap and it's way ahead of Uniswap. Okay, look at Uniswap. See, PancakeSwap, they're trading at with their circulating supply of 30%, which is nuts. It's sorry, but it's low. Look at Uniswap. Uniswap is trading at 58%. You'll see that. That's where Saucerswap is hanging. They're hanging at this height. With, you want it to get closer to 100%. The closer you get to 100%, the better. Or you slow down the roll, but that's what you want. Saucerswap is already, they're already at 54%. You see that, how much they've advanced? It's amazing. Okay, well, that's it. Wow, they're available already in the Mexican exchange. Wow. Okay, well, all right, guys. Well, this is Safe Investor AG, H% Sauce Warrior. Thank you guys for watching. This video is not financial advice. It's made for entertainment purposes only. And have a saucy day.